Gold had started the year on the back foot as the Christmas rally gains were wiped out in just one trading day. The question now is whether the bears are going to take over during January and set the tone for the rest of the year. Welcome to our market analysis videos here at Zenfinex. For those who are new to the channel, my name is Connor and I'm the senior market analyst at the company, providing to you daily videos on market analysis and educational content. Now for today's video, I'm going to be giving my forecast on the gold market for January 2022. And to do this, the video will follow the consistent format of a fundamental analysis followed by a technical analysis. Enjoy. Okay, so first of all, I'd just like to say a massive Happy New Year to our subscribers and our viewers. I hope you enjoyed your time with your friends and family. We are back with normal videos, and as you know, today is all about gold. So let's talk about this Christmas rally that we've seen. The rally was driven on extremely low volumes, and I'll show you that on the chart in a minute. As really people enjoyed their holidays and their time off, you do get a period over Christmas where the volumes are low. We saw equities rise, which is quite normal as well. This sort of environment isn't sustainable, first of all, and a rally of this nature shouldn't really be trusted. And as traders return to the charts, the signs are becoming a lot clearer. U.S 10-year Treasury Yields have now exceeded 1.6%, which is more than a 1-month high. And this is down to inflation break-evens, and real rates haven't moved too much. This essentially means that the market is pricing in higher inflation. And if you've seen my analysis before, you'll hear me talk a lot about U.S yields, and generally speaking, higher yields are something that put pressure on commodities such as gold. Our attention is going to turn to today's Federal Reserve meeting minutes. I think it's 7 p.m. GMT. Monetary policy, of course, is always a huge market driver. It will be throughout 2022 as well. And the Federal Reserve is expected to hike interest rates. I think it's 3 times. I think if them predicted, it's going to be the first one in April. It's going to happen throughout 2022, and it shouldn't cause too much shock, this meeting today. But it's going to make any gold rallies hard to sustain if they kind of reiterate their previous stance. Now, the number of COVID-19 cases globally continues to rise, with the US setting the record for a daily increase of cases, and that was around 1 million cases that they increased in just one day. Normally, in a time of rising COVID-19 cases, investors turn to safe haven assets such as gold. Omicron is a more transmissible variant, which is why restrictive measures are being put in place around the world, really, such as work from home instructions. However, the symptoms that you get from Omicron are a lot more mild in most cases, and I would know because I did have it over Christmas. It really just felt like a mild cold to me. Therefore, I do not think the bulls can use this as an excuse to buy gold unless the situation worsens and more measures are put in place. And to conclude, for January, the fundamentals for me are favouring the bears at the moment, and as a result, I'm going to be looking for any bullish momentum into premium price levels as a chance to sell this market. But let's take a look at the chart anyway and mark those key levels throughout this month. Okay, so I'm on the chart for gold now actually, and starting off on the daily chart, as you know, I always have this double bottom mark there, and the reason is not only because there's liquidity sitting underneath that we can target, any selling take profits I like the look of, and also it's really good support level as you've seen before, so I like to keep this level in there. Where we are at the moment is at around 1816. You can see we had this Christmas rally over the festive period, and we had this huge dump on really the first day that everyone came back from work. Since then we're starting to recover slowly. Hi guys, thank you for listening to this video. Just really quickly wanted to touch on a really exciting offer we have on the website. It's a limited time offer, and if you head over to zenfinex.co.uk, you will see the offer in front of you straight away. And this is that you can trade Forex on a standard account with raw spread plus 0 commission. And now Zenfinex is also an FCA and no dealing desk execution broker. If you are interested in this offer, you can get in touch with the team by clicking learn more, or you can simply go to open an account where you can start the application process. Now what I wanted to show you is I have the volume indicator here, and as you can see, at the time where we had this Christmas rally, let's say from really the 23rd of December, you can see just how the volume actually was really low. The volume still is low. There still is a bit of a hangover from the Christmas rally, or from the Christmas period that we had. So you can't really trust exactly what's going on here. I think maybe the Federal Reserve meeting minutes later on is going to be a real driver for the rest of this month. Now, the only case I really have for gold actually going up any further today is we could get a situation where we feel this, what we had, this inefficient pricing that you can see in here. We could get a situation where we feel that inefficient pricing up to around 1840. However, more than likely, I think that we're going to get a chance where we break through these moving averages. If I zoom right in, you can actually see, to be honest, I know we've had this moving average cross, where the 50 moving averages crossing both these moving averages here, but as a whole, the price action is so flat that you can see there's not really much direction. We are waiting for a break either side. So the key levels I want to mark before I start jumping into too many trades is I like to mark this low down here around 1750 and also this high up at around 1877. I'll be looking for any liquidity grabs around this level, because I only trade really when we do get a grab of liquidity on either side. And what by that I mean, if you was a buyer of this market around this level, say you wanted to buy the market here, then you're likely your stop loss is going to be sitting just below these lows, right? Which means there's a lot of sell side liquidity there. It's the same sort of thing where if you were selling the market, your most sensible stop loss for any retail trader is going to be here, right? And the big players do know this, and what they tend to do is they get the market either going and wicking above and taking buy side liquidity. So essentially they buy to sell, or they sell to buy, which is a nice way of explaining it, and I've said this before. So I want a situation, at the moment I'm pretty neutral on gold. I do think we could get a situation where we feel this price inefficiency that we have at 1840, but more than likely what I want to see is the market make an expansive move either up or down, either grabbing liquidity at 1877 or grabbing liquidity down at 1750. Now, if you don't want to wait too long, because that probably will take, well, judging by this price action, might take a couple of weeks, but I do expect volatility to pick up, so it shouldn't take too long. We do have more potential liquidity sitting, let's say below here. That's probably quite a sensible liquidity mark where we have some sell side liquidity. So we could pull this level back and see the candle wick below there, which could be a sign to buy the market, potentially, who knows, or we get a wick above this level. Let's get rid of that. If you want to play on the shorter range, that is, we could play on this range here where we get some market manipulation on the current high that we have here, and then we could look for that expensive move to the downside. What I favour most is this filling of this price inefficiency up to 1840. I'm a seller around 1850. So can we get to that level? Similar sort of situation here. You can see we have this strong order block level from this buy, but you can also see where the market actually lost momentum, and you can see that as a whole, the volume on this candle was quite significant. So we could see, if we use this order block as a potential selling opportunity, covering the wick and the high, you could get a situation where you could sell from here. With your stop loss just above, but again I'm worried about the market grabbing liquidity up at these levels, because it does like to target, and again essentially I target the liquidity down at around 1790 for a 4.7R trade. That's something you could do, but I think this is a market of patience at the moment. Do not need to jump into too many trades just yet, but I do fancy the fundamental side of the trade favouring the bears at the moment. Listen out for that. Federal Reserve meeting minutes later. Don't think there's going to be too many shocks, but I think it's going to be hard. What they say is going to make it hard for gold to rally significantly. So we could treat any real rally that we see in gold as an opportunity to sell, and that's my view on gold this month. So that's it for the first video of 2022. I hope you enjoyed this video, and we have helped improve the production of the video as well. And we are going to have some more improvements as we go, but drop any comments in on the comment section and what you thought, where you think gold's going to go. You may see With the sort of style that I trade, I can't see too many opportunities just yet, but we are just getting back into things here, and volume is low, as I've mentioned. I'll give an update on this market throughout the month, but other than that, I hope everyone has a great trading day, and I'll catch you all for the next video, which is going to be tomorrow on the silver market.